First of all, I think unlike 1997, many Asian countries learned how to handle this kind of crisis and turmoil. Especially they learn how to use flexible exchange rate, not to waste foreign reserves, and also they understand that how to regulate the bank more safely. And more than anything else, if you just look at their short-term liability versus foreign exchange rate, exchange levels, reserves, they have a much larger foreign reserves to cover these problems. So at this moment, it's not just for the liquidity problem, and many investors are worrying about whether their long-term growth momentum will continue. So in some sense, they probably have to take this as a warning that the structural reform is more essential to even stabilize the short-term market, but it's not the liquidity problem like 1997. Yes, actually, we are saying that they shouldn't be complacent. And now, after the September announcement, I think also the recent, this partial breakdown of the, U.S. government, and that may actually slow down the QE tapering. But on the other hand, eventually this QE tapering will happen. And in the last couple of months, the market turmoil in the whole emerging market really shows how vulnerable this emerging economy is in terms of liquidity. So they have to be careful. No, I think when the U.S. really start to, this tapering, and I really hope that they can solve this debt ceiling issue. So even assuming away debt problems, when U.S. economy recovery is forming, so tapering will happen, interest will go up, and capital outflow in some sense will gradually start to move out from some of the Asian economies. We have a simulation, and we find that the 1% slowdown of China will reduce the developing Asia's growth rate by 1/4 percentage point. But on the other hand, the impact is much severe in the East Asian countries, which has more trade relationship with China. So in principle, it can have a large impact in the medium term. But at this moment, the impact is not yet realized. And at the same time, we believe that our simulation is based on the historical data. But if China becomes quite successful in transforming from export orientation to domestic demand growth, then it can also import more from the ASEAN countries. So it has a pros and cons. But overall, we shouldn't expect that China will grow by 2-digit growth rate. That really depends on the Indian government's policy reaction because, India is a very closed economy. Actually, if you're just thinking about why they have a current account deficit, and their gold import is as big, almost half of their current account deficit. So it's not a liquidity issue. It's more like the structural issue why they have a higher inflation, high budget deficit. So as long as Indian government address this structural issue, I don't think they will have any problem like 1991 because they have a large foreign reserves. But if they do not address this issue, then people will keep on importing gold. And if they delay the infrastructure project and the reform is delayed, then I think this problem can be serious.